Well, hi everyone. Thanks, Diane. So like she said, there's my title. So I work closely with Chris Grondike as my advisor. And so today I'm going to talk to you guys about kind of the purpose of my research, genetic mutations, so that's what genetic testings are looking at, and then the public view and current regulation of genetic testing, and then looking forward at my research, specifically the models I use to quantify the financial impact, and then the results and conclusions that I found. So for my research, I was looking at how much of an impact does genetic testing have on various life products if the company was able to price for it, or if they actually price for it, because currently they don't. And so looking forward to, so what genetic testing actually tests for is mutations. And so mutations happen with these different examples. And so what I looked specifically in my research was at mutations that increase your risk for breast cancer. So those are known as BRCA1 and BRCA2. And those genes specifically are produce proteins to suppress tumor. And so whenever they're mutated, such as a deletion or duplication of that certain gene, then it's not working properly, and so that's when tumors start to grow, and so you have a higher chance at breast cancer. And so starting with the public view, I know there's kind of a negative connotation with genetic testing, and so one of the first myths out there is that genetic diseases are inherited diseases, which the reality of this isn't true. Only for cancer, only 5% is inherited. The rest is just genetic in nature. Another myth out there is that it's unfair for insurers to underwrite on the basis of conditions in which individuals have no control. And reality of this is you have no control over most diseases. And life insurance companies already price and base your risk off of if you have a potential risk of that. So that doesn't really have an effect either. And another myth is that it's unfair for life insurance to underwrite if you have a positive test and you're healthy. And the reality of this is just the general public doesn't understand what risk classification is and what a positive test results in. And so when genetic tests are positive, it just means that you have a higher chance of developing that disease, not that you will develop that disease. So just have to keep that in mind. And then our last myth that I saw was that genetic testing is associated with unfavorable consequences. And the reality of this is most test results are actually negative, so most are not positive. So you rarely see those, but you always remember the bad results, but doesn't always happen. And then looking at regulation in the United States, there's no federal mandate that governs genetic testing and life insurance, but there are states that have their own statutes and laws. And so the ones in green are states that have some statute in place. There's 15 up on the graph, and I'm sure there's more that have developed different laws. And so what those are more about are genetic discrimination. So life insurance aren't discriminating based on genetic testing, as well as just it allows, some of the laws are about allowing insurers to use the information if they have actuarial judgment. So none of them actually outlaw genetic testing. And so throughout my research, I'm kind of going to use this kind of similar example of someone who's age 30, and again looking at genetic testing for BRCA1 and BRCA2 mutations, and then since it's breast cancer, it's focusing on females. And so looking at my model, I started with a benchmark model just to quantify the financial impact. So I started with a simplified model where we have someone who's in state 0 and who's uninsured. So they're uninsured, and then they can also be insured. And then our last state is they can be dead. And so the movement in this model is we have our 30-year-old female who's uninsured in our population, and she decides to buy life insurance. And so she's going to move from the insured state to the uninsured, or the uninsured state to the insured state. And so that's going to be a probability or chance of that happening. And then once she's in the insured state, she's going to be paying a premium to life insurance companies. And so then she's paying that, and the only way she can move out of being insured is when she dies. And upon her death, the life insurance company is going to be paying out a death benefit. And then another scenario we have is she doesn't get insured, but she can also die. So I want to model that as well. And so again, these are kind of the simplified model that I used as my baseline. And so I took this model and expanded it to include genetic testing. And so this is kind of how I took it to expand it further. So here's just my simplified model. And then I added in genetic testing. And so that shows those are the components of genetic testing. So if they got a genetic test, they could test negative or they can test positive. And based on those results, they're going to move around my model a little differently because the chance of them buying insurance is going to be different versus if they have a positive test versus a negative test. And so we're going to look at our negative result. And so if we have that 30-year-old female who decides to get a genetic test. And so she gets a genetic test and she's going to decide, do I want to buy life insurance or not? So she's currently in state 2. And so if she decides not to buy life insurance, she's going to stay in the state until she dies. But if she decides to buy life insurance, she's going to move into the insured state. And so again, in that state, she's going to be paying a premium until her death. And then on her death, the life insurance company is going to pay out death benefit. And so the same thing happens with a positive test. So the same movements can occur. The only difference is, again, with a positive result, I assume the higher chance of them buying life insurance compared to if they had a negative result. So that movement right here is going to be stronger. They're going to be higher in my model. So again, this is my model that I used for genetic testing. And so, and then a reminder of the cash flows of kind of how we're going to pay out as a life insurance company. The ones in green are the only states where a premium is paid to the life insurance company, and movement from the green states to the dead state is only time when the life insurance company is going to pay out something. So all the other states going to dead state didn't account for any money going around, so there's no financial impact of this. So some additional assumptions I needed while pricing my product was I assumed a death benefit of $100,000, and I also assumed 6% interest. And then I put a limiting age just to make it more practical because most life insurance policies mature at a certain age, and most people kind of are dead by 120 as well. And then I also assumed mortality follows a certain make-up law with some additional factors. So I could assume that if you were insured, you lower mortality. So I applied a factor to that. And then also if you have a negative test but didn't get life insurance, I can assume you have slightly better mortality as well because I know you didn't have, you don't have an increased risk because you don't have those mutations that I was testing for. And so then looking at my results, I calculated the premiums for the simplified model and the premiums for a genetic testing model and looked at how much they increase. So all of them increase, but for the 20-year term, it was pretty consistent for the different pricing age. So all those ages are the age that you started my model. And then a whole life started out pretty high for lower ages because it kind of makes sense because you have that policy for a longer time because a whole life lasts your whole life versus a 20-year term is only for 20 years. So then looking at it specifically, looking at my 30-year-old example, we're going to look at the dollar amounts. And so that increase really only equates for about $20 for a whole life and about $1.50 for a term life product. So really it wasn't as much as a final, looking at the dollar amount, it wasn't a big financial impact to the life insurance company. And then I also looked at the expected losses. So this is how much they expect to lose on that policy. And so life insurance only expect for a 30-year-old, $10 more for a 20-year term. So again, they're not expecting to lose as much for pricing for genetic testing. And so in conclusion, I did find that there was a quantifiable impact to life insurance if they priced for genetic testing. And then some further improvements that could be taken is looking at simulation. That way you can see how people actually move around the model and see how much loss is, how many people get a negative test or a positive test. And then you can also add in the factor. If you get a positive test, you might be more likely to buy more insurance. So instead of 100,000, you're going to buy 200,000. And so see that effect on the overall insurance perspective would kind of be interesting. And then also, lastly, in conclusion, genetic testing shouldn't be feared. It's actually been developing and to allow for preventive care. So since they know you're at increased risk, you can go more and get more help from you. They can track it better. So it's definitely something that shouldn't be feared. But right now, there's a privacy issue, and no life insurance company wants to be the first one to implement it. So I don't see it happening soon, but maybe down the road, in life insurance may be using genetic testing. And that's also not cost efficient, because since it's only about like an extra $10 for a 30-year-old, they're most likely genetic tests cost around $100 of dollars, so it's not really cost effective to test everyone. So down the road it might be implemented, but currently it's not. Any questions?
I like how you're able to build your own model to be able to try to assess the risks and the financial impact and the cost. I was just wondering, how did you choose to use the BRCA gene mutation, and do you think it would be any different if you chose a different mutation?
I chose my mutation, so BRCA1 and 2, because there's not actually a lot of information on genetic testing that's quantifiable for how much it increases your risk. So there was limited research on that, which is why I chose breast cancer, because I've found that information. But slowly there's a lot with the science, and it's been developing a lot more. So the bridge gap, they will be able to bridge the gap. So I'm sure like in future that they'll be able to look at it. But I would say it's probably similar with other mutations.
All right, thank you, Monica.